Well, Mr. Abhay Soi, Chairman and Managing Director of Max Healthcare, joins us now to walk us through uh, the quarterly numbers. Remember, for hospitals, the quarter gone by was a tough one because of the second wave, but it also was a quarter where the COVID business, it's not a great business, but it's a business in terms of revenue, was at its peak. Abhay, good morning. Thank you for joining us. Now, the revenues came at about 1400 crore, 20% year-on-year growth. What led to this bump up?
So I think clearly two things. One is there was a huge upsurge of COVID, which led to a very, very high occupancy. So if you actually see the month of April and May, it was, I think, 87 and 85% respectively, albeit at a lower ARPOB. Nevertheless, it contributes to revenue. I think that coupled with a very high offtake of vaccinations, and if you recall, we perhaps were the first, healthcare providers in the country on May 1 to start private healthcare. And at that time, it wasn't really, the prices weren't capped either. So the first 2 months led to extremely high occupancy as well as high vaccinations. And I think come June, what we saw was a dramatic reduction as far as the COVID business was concerned. At the same time, what we also saw was there was a extremely fast and swift, rapid, comeback of non-COVID and elective surgeries, which essentially led to high ARPOB, although lower occupancies.
Could you walk us through the EBITDA margin in COVID vaccination revenue, and do you expect this number to continue?
So I don't think it would be the key drivers going forward for the rest of the year, because the sort of offtake that we saw initially in the first 2 months, has come down dramatically. We were doing close to 50,000 vaccinations a day. That number's come to about 6,000 to 7,000 vaccinations a day today. And there have been price caps as well. So what you're going to see is, of course, there will be some residual and some offtake of vaccinations, but the amount of vaccinations offtake has reduced dramatically. This is essentially due to the fact that I think the government is offering free vaccines, and secondly, also there's seems to be a huge amount of vaccine hesitancy across.
Abhay, the new management is bringing in cost savings and other improvements as well, as we can tell, tell by the numbers. How is it that you're looking to improve your costs further? For example, Nanavati, your company's flagship hospital in Mumbai has low EBITDA margin because of high personnel costs. How is it that you're going to improve that going forward?
So I think, on an aggregate level, we're very happy. What we inherited was a combined EBITDA for financial year 2019 was 348 crores, and we've sort of outdone that in this quarter itself, in the first quarter. So it's a massive ramp up in EBITDA over the last 2 years, and very challenging 2 years, as you may, also endorse with COVID and everything. Going forward, there'll always be certain laggards. Some places will have delayed success. At aggregate level, we are very happy. This quarter itself has a 27.2% EBITDA margin. Even without vaccinations, we have about a 25.5% EBITDA margin. There's more to come. Like you mentioned, Nanavati has been lagging because of higher personnel costs, and that we intend to address through VRS. And hopefully, we should have it closed before the end of this year. Close it within this quarter and roll out perhaps by next.
Abhay, do you think superior return ratios could be demonstrated as, there is a case mix which is driven by strong focus on clinical excellence?
So, of course, I think there are some things to still look forward to with respect to, a return of the international business, which is significantly down from where it should be. As well as the OPD business. Having said that, you have a certain pop-up in this quarter because of vaccination. So that number should come down, the vaccination number. I think, the high occupancy of COVID, as well as the vaccination revenues, will largely get sort of offset by higher ARPOB right away of the non-COVID business.
Hi Abhay, this is Mubina as well joining in. Share with us an update on what's the capex plan for the next fiscal, the fiscal after that, and also what's the update on the brownfield capacity addition at Mumbai and Delhi.
So we are hoping to commence the brownfield expansion of Mumbai within this quarter and of Delhi within this year as well, hopefully by the end of this quarter, if not early next quarter. And the smaller brownfields, we are looking to, with these 100 odd beds in Shalimar Bagh and Mohali, we intend to start by end of the quarter or again beginning of next quarter. Our total capex requirement would be, well, we have a maintenance capex of 120 crores a year. Other than that, we are looking at a capex of close to 300 to 400 crores over the next 1 or 2 years. Because the former part of expansion usually is not very capital heavy. The finishing and the equipment typically comes later. This should be at a cost of about 13 to 1500 crores over the next by 2024.
Well, Abhay, all the very best for your capex. Thank you so much for joining us this morning on ET Now.